Well, my presentation is a good follow-up to the presentation of Dawn Marie, because she was talking about insurance as a safety net. And insurance is indeed a safety net that replaces the financial loss you have under certain circumstances. But my one is a little bit broader than hers, because she's talking about the money you have in your account, right? But we are now talking about any economic loss you can have, whether it's something you own, a property, or perhaps somebody got injured or at worst died. So let us look at what is insurance. Anybody can tell? Insurance protects you and your loved ones. And you see that nice house in the background there. You see that nice car and that nice family. We want to protect them in the event of economic loss. And let me just move to the next slide so I can put it in some kind of a perspective. Insurance is a promise to pay a sum of money to compensate for economic loss of a person or an asset in the event of some misfortune. And these can be the death of a breadwinner or the destruction of property such as a house or a car. Or it could be as a result of illness. And let me explain for you. The breadwinner, the mother, father, earns money to take care of the children, to provide the food, clothing, shelter, until they get to the stage where they can provide for themselves. What insurance does, life insurance in particular, and I'll get into that, if, God forbid, the person dies prematurely or becomes disabled, what insurance does is to seek to provide the money that the person would have earned to provide the food, the clothing, and the shelter, so that although mommy or daddy is no longer there, they unfortunately died too soon, the income that they would have used to provide all these things will be replaced. Similarly, if you have a house that provides shelter for everybody, and a hurricane comes, or there's a fire, or some flood, you know about flood in Montego Bay, right? Then, if the house is insured, then you pay your premiums, and the money will be provided to seek to replace the house that you lost. The other type of insurance is one which trips in if there is illness. And if you get ill, especially if it's a critical illness, and these days we hear about a lot of persons who are getting cancer, which is an awful, awful illness. Cancer now, medical science has developed a number of things that can help you to live much longer and live a useful life with cancer. But guess what? It costs a lot of money to do the chemotherapy and all the other things that the doctor needs to do and to provide the medicines to keep the person active and alive. So again, insurance trips in. So it is indeed that safety net that seeks to find the money that you would have used normally to deal with these hazards that reach you, because it's hard to do it on your own. The concept of insurance is really the pooling of risks. Simply put, insurance involves the group of persons, and the bigger the group, the better, putting their funds into a pool that if someone has a financial loss, then there's money in that pool to compensate the person for the loss. It is based on the principle that everybody does not have a loss at the same time. Everybody else not going to burn out at the same time, right? Everybody car not going to crash at the same time. So what you do, you put the money in a pool, you pay what we call a premium, and the insurance company invests the money so that when you have your misfortune, there's money that comes from that pool to take care of that problem you have. Insurance started, one of the oldest schemes on record is the one set up in Rome for the soldiers who went to war. And what they did, they know that when you went to war, some of you weren't going to come back. So the families of those soldiers in Rome created a pool, and they put money in that pool so that if anybody died, or when, not if, we are not immortal, when someone died, there was money from that pool to help those families. And that very basic and simple concept from yesteryear has been refined to become insurance as we know it now. Let me talk about the types of insurance in a little more detail. There are two main types of insurance. There's life insurance, and there's a range of life insurance. There is one that provides protection in the event of death. We call it life insurance. Some people like to say, no, it's death insurance because it trips in on death. But the fact is that we are not immortal, and we are going to die at some point. Sometimes much too early for our use. We know, I needn't tell you about what is happening right across the country, and in particular this side of the world. We don't like it, but it's a reality. So part of financial planning is to plan for all eventualities. So persons die at short notice without knowing. We have a lot of motor car accidents on the road, and unfortunately we have violence and murder. We also have living insurance benefits. So there are packages that provide insurance protection, but it provides an opportunity to save some of that money and to invest that money. And insurance companies tend to provide plans for long-term investment, particularly to provide money for the time when you retire and you're unable to work, and that fund is built up so that they can take care of your expenses and sort of have a kind of build-up on their pension or your NIS pension or your pension from your company, so that you can still sustain yourself even after you live. Health insurance, all of us know about that. You get sick and you have to go to the doctor, or you have to be hospitalized, and the bills can be significant depending on what happens to you. So health insurance provides that. And we spoke about critical insurance, critical illness insurance just earlier. That's life insurance. The other side of the insurance coin is called general insurance. And the one that a lot of people are familiar with is motor insurance. The law says your car must be insured, not just to replace or to fix your car in case you have an accident, but more importantly, if your car causes injury to other users of the road or other person's property, then there will be some funds that you can get from your insurance company to help those persons if they become injured, or if you hit down a man's fence, you can fix back the fence. So property insurance provides, motor insurance provides that for motorists. And there's a property element in it, because if you hit somebody's property, the motor insurance also covers that. Property insurance, most persons are familiar with what happens when a hurricane comes and destroys the house. We know what happened 2 years ago. We saw what happened in Puerto Rico. We saw what happened in Dominica. And those of us who are old enough remembered what happened in Jamaica, in Gilbert, where people lost their entire house or lost their entire roof. So property insurance becomes very important. But a lot of people will insure their house, but there are people who rent and say, boy, it's not my house, so I don't need insurance. But guess what? All the things that you have in your house, all the contents, your TV, your computer, your cell phone, your sofa, your bed, your fridge, your stove, they are yours. So outside of that person insuring the house, you need to secure those things, because if you get flood out, then you need to replace them. I need to remind you what happened in Montego Bay 2 years ago, where there was a major freak flood and a lot of businesses and houses were flooded out and persons lost their assets. In fact, there was a very interesting situation where a businessman trying to recover his goods had them drying out in the backyard because he wanted to sell them back, because he was going to face a substantial loss. Now, if he had insured the goods in his business, then he would have collected the insurance. You could also buy insurance to ensure that if your business was down for a week, a couple of days, then it would replace the income that you would have earned. So there's a whole range of insurance that you can get. You simply need to call the insurance companies or the insurance broker. So there's a range of business and personal insurance that is available to ensure that when misfortunes come, you can take advantage of it. The insurance industry has been concerned about the fact that Jamaicans are underinsured. Boy, the breeze giving me a hard time, but I get in there. Our figures show that only about 29%, or approximately close to a third, of the Jamaica workforce has individual insurance. And only 1/3 of the workforce, or a quarter of the entire population, has group health insurance. It's even worse when we talk about houses. It's estimated that there are over 600,000 houses in Jamaica, but only 130,000 persons have insurance, or only 20% of the houses are insured. The interesting thing about the house insurance is that if you borrow money from a mortgage company to buy the house, you have to buy the insurance. So most of the houses that are insured because the mortgage company, it's not just you they're protecting, they're protecting their investment. So why, when you pay off for the mortgage, you don't want to protect your own investment? A house is a hard thing to replace if it gets destroyed. We live in an earthquake zone, a house in a hurricane zone. So whereas hurricane has a season, fire has no season, earthquake has no season. So there's no warning when it will happen, and as we know, flood happens as well. We have a crisis with motor insurance, as you might have been reading in the newspaper and hearing on the news recently, that only about 3/4, depending on who you talk to, of the cars on this road are insured, although everybody is required to do that by law. So when people are required to do it by law, only 3/4 of the people do it. When it's left to your own will, it's even worse, 30%, 25%. And when you have a death, the first thing people bawl, where is the insurance? And then you get on the phone and you call your relatives abroad and tell them that you have a crisis and you want them to send some money by Western Union or MoneyGram or whatever to send you money. And they get tired of it. I've heard them saying, why the people in Jamaica don't buy insurance? Why should I be sending money to bury somebody when they can buy insurance? And lastly, we have a problem in terms of pensions. Only about approximately under 10% of the Jamaica workforce is registered in a plan, an approved pension plan. There's another 10% which are government workers, but even if you put that in and you have 20%, then that is absolutely too low, and we have in fact a crisis. The NIS, which all persons who work supposed to be a part of, is just about 40% of that workforce is enrolled in the NIS scheme. And the NIS only gives minimal benefits, so that alone can't do it. So you have to move to protect yourself. I go back to the importance of insurance to make the point that any good financial plan, and we are here to talk about financial planning. One of the interesting things about money, everybody bawl that them don't have enough money. They want more money. Depending on how you define it, you want progress or prosperity. And then you have a session like this, and the people don't turn up. But they want to know how to make more money. So you come to hear how you make money and how you invest your money, how you protect your money, and people tend not to show up. So I make the point again. Any good financial plan will fail if there's no insurance, if misfortune strikes. And nobody knows when that is going to happen. It's a risk that all of us live with. Nobody knows when you're going to die. Nobody knows when you become disabled, get ill. You don't know if the hurricane going to strike you, because we haven't had a serious hurricane for a long time. Maybe this year is the year. You don't know. You need to prepare. And car accidents, needn't talk about that. You've been hearing it all over on the news. A lot more terminal illness, which means that expensive treatment is necessary. So all those things can mash up your financial plan. Nobody is immune, so persons can need to put insurance in place, and only insurance companies provide that service. So I'm going to encourage you all to contact your insurance agent, contact an insurance company, contact an insurance broker, and they can sit down and work out your insurance need and design an insurance program to match your budget, right? So don't say it is too expensive and I can't afford it. We can work out a package. So you cover what you can cover. Sometimes you can't cover everything, but partial insurance is better than no insurance. Take action today. Get your insurance in place. Thank you.